All right, we have five companies, five stocks to break down, all of which just reported earnings. So, guys, cheers. Let's just get right into it. Hit the like button. Do not forget to subscribe as we're almost at 50,000 subs. I appreciate you guys as always. And now, let's just get into it. So, it's about 11 a.m. on the East Coast right now. And by the way, guys, the markets are all over the place. S&P's down a little bit. Same with QQQ. It's actually down more than the S&P. QQQ's down 0.3%, and the Russell is up over 1%, with the Dow up about 0.1, 0.2%, not much. So, yeah, mixed bag type of day for the stock market today. And like I said, we have five companies to break down. Let's just get into it, man. Then maybe we'll take a look at the indexes later in the video quickly if we have time. But yeah, number one, UPS. UPS, which, guys, you know the stock's been struggling over the last couple of months, years, I feel like at this point, and man, it just got a lot worse. It just got a lot worse. The stock's down 18%. Yeah, you heard that right. 18%, guys. We're down $23 a share. We're now trading at $110 per share on UPS. This is a disaster. The company reported earnings per share adjusted of $2.75, which beat the $2.53 expected, but sales missed. $25.3 billion versus $25.41 billion expected. So a miss on sales, slight beat on EPS, and it looks like here they're planning $5.5 billion in dividend payments, $1 billion in stock buybacks in 2025. I mean, yeah, clearly that's not enough, nearly enough to hold the stock up. I mean, at this point, I don't really know, man. This is just a disaster. It looks like they forecast revenue of $89 billion for 2025. That must be soft. I mean, it's the guidance has to be bad compared to the estimates. I'm not seeing the estimates here, but I mean, there's no other explanation for this stock to be down 20%. It looks like UPS to cut volumes with Amazon. Oh, wow. That's bad. It looks like, yeah, UPS to cut volumes with Amazon, denting near-term outlook. UPS says operational overhaul could save $1 billion. Okay. UPS chief says Amazon dilutes margins of U.S. business. This is actually a record. It's on pace for a record percent decrease. Holy smokes. Yeah, UPS beats earnings, but the stock is falling. Blame Amazon. That's what this Barron's article is saying, the headline. But yeah, I mean, this thing, guys, it's been getting hit for months and years, actually. I mean, this stock was at 100 or 200, $30 a share about 3 years ago, and now we're down over 50% from that point. So I'm not a big fan of UPS, although I guess on this monthly chart, the max chart, which goes back to the 90s here on Thinkorswim, guys, I guess the chart looks decent. I mean, if you want to, if you have a multi-year swing trading outlook, maybe you can take a flyer on this one, but I'm staying away from it. I think they're struggling. The proof's in the numbers, so I'm staying away. I'm curious, FedEx, are they dumping right now as well? Probably, right? Yeah, they're down 4%. Competitor, obviously, to UPS. So keep your eyes on FedEx, UPS moving forward here. We also got MasterCard's earnings today. MA is the ticker, which, guys, we called this out in my email on Monday. It's free, by the way. I send it out every Monday. My top stocks right to your email. Sign up down below. We talked about this. We talked about the ascending triangle on MasterCard, and, well, it broke out. Now we're up $40, I think, from that email, and the stock is at all-time highs. We're up 5%, 4-5%. So this looks great. Would I necessarily chase it here? Probably not. I would probably let it be for a little bit, wait for the pullback. But if I was already in it, beautiful. This is great, right? MasterCard reported adjusted earnings per share of $3.82 versus $3.69 expected. That beat and sales beat as well. $7.48 billion versus $7.38 billion expected. So a double beat for MasterCard. It looks like their shares are trading higher after gross dollar volume up 12%, purchase volume up 13% on local currency basis. Anything on guidance? I mean, that's pretty much all we got. Looks like Raymond James a couple days ago adjusted their price target on the stock to $614 per share from $584, and they're maintaining an outperform rating, which is good. So at this point, I wouldn't chase it. I think it's a little overbought. I'd wait for a pullback. But if I was in it, I'd probably be locking in profits right now, especially if it's a trade. And I'd just wait it out and see where it goes. So another one we have to go over, guys, is Blackstone, ticker symbol BX. They reported earnings this morning. Earnings per share came in at, on an adjusted basis, $1.69 versus $1.45 expected on sales of $4.15 billion versus $3.84 billion expected. So double beat for Blackstone. Let's see, anything on guidance. Looks like here Blackstone President John Gray said Q4 results one of the best in our 40-year history. Wow. And honestly, guys, I'm not too well versed on Blackstone. I mean, yes, I know Blackstone, what they do, but I haven't dove deep into the numbers, the history of the company. But hey, 40 years, best quarters, one of the best in nearly 40 years. That's good. But the stock's down. A little bit, 4%. Looks like we're testing the 180 SMA here, testing the trend line as well, guys. This needs to hold for the bulls. And we actually have a wedge. What direction are we going to pick? That's the $1 million question here on BX. So keep your eyes on it. We're a bit more oversold on the RSI now. So, hey, maybe buyers do start to come in after they're saying it's one of their best quarters in 40 years. So let's keep it pushing here, guys. We have two more stocks to get into. But actually, wait, before we do that, don't forget to get your 30 stocks from Moomoo. Open up your account using that link down below. And you guys see right here, you get up to 30 stocks, man. Deposit at least $100. You get 5 free stocks. Deposit at least $2,000. You guys see that right there? You get 25 more stocks, and your uninvested cash right now will earn 8.1% APY, guys. So it's a no-brainer. Check out the deal down below or go to stocksurfs.com/Moomoo. Get your 30 stocks. It's a no-brainer. And now let's keep it pushing. LUV, Southwest Airlines, also reported earnings this morning, guys, and their stock is up a little bit, not doing much. Although we are up a lot from the lows back in, over the summer, early August, we hit $23. Now we're at 31, 32. So yeah, we're up a lot off the lows, but still not doing much as of late, especially today. And technically we're still in a little downtrend over the last couple of months. If I pull this up on the 4-hour chart, I zoom in right now. We pull this up right here. You guys can clearly see, right? We're in a downtrend, little downtrend, right? In the short term, we also have a death cross. So let's see. I mean, for me, guys, to trade this thing, to go long, I'd like to see it break out of here, which we're not doing that yet. So I'm going to set my alert at about, let's do $33 for now. Mark is that we're above $33 per share, and we'll see where it goes. So LUV reported earnings per share. Let's see here, guys. Let's come down of adjusted 56 cents versus 44 cents expected. That beat, but sales missed. $6.9 billion versus $6.96 billion expected. So mixed bag there. Anything on guidance? Where are we at? Not seeing anything on guidance. I feel like a lot of these companies, guys, are not giving guidance. I think Meta didn't give guidance yesterday. I don't think Tesla did either. I mean, why the heck would they at this point? They're struggling in the short term. I think revenue year over year on a full year basis for Tesla went down like 8%, which is not ideal. But yeah, that's LUV. I'm waiting for the break, $33. And last but not least, ladies and gentlemen, Caterpillar, ticker symbol CAT. This stock's down about 5% right now. They reported earnings, let's see here, guys, adjusted of $5.14 versus $4.99 from last year on sales, or not last year, compared to the estimates on sales of $16.2 billion, which missed the $16.41 billion expected. So BDPS missed on revenue. Let's see here, guys. Looks like 2024 revenue fell 3% year over year, driven by $3.5 billion drop in sales volume from lower equipment demand. Interesting here, guys. Interesting. Partially offset by $1.2 billion in favorable price realization. So, yeah, I mean, looks like lower equipment demand. That's something worth looking deeper into here. I'm sure that is, not the best sign for the stock, hence why it's down. Looks like here Caterpillar misses on revenue again, warns of a decline in 2025. Yeah, demand's coming down. Not ideal here, guys, at all. But, hey, we're still trying to fight above this 180 moving average on the 4-hour chart. So let's see if we're successfully able to bounce off that. But I'm probably going to stay away from it considering they're warning 2025 might not be the best. So let's give it a little bit. Let the stock digest that. Then at least that's what I'm doing. I'm going to see in a couple of days kind of how we're looking like. So that's pretty much it for the video. I'll just save the market breakdown for another video today, guys. I mean, it's not doing much. S&P, NASDAQ, pretty flat. Same with the Dow. The Russell's really the only mover. But yeah, we'll break that down later. Hit the like button on this video, guys. Make sure to subscribe. We're almost at 50,000 subscribers. And do not forget to get your 30 stocks from Moomoo. They're linked right down below, guys. It is free money. Check it out. And with that being said, guys, cheers. I'll catch you in the next video.